One of the most common types of people that have trouble getting mortgages are self-employed borrowers. And so that's everybody from your commission salesperson down to the person that owns a big company. Two things that really happen in those situations that provide problems. First of all, and most importantly, is that you pay an accountant a lot of money to write off your income. So you're trying to show as little income as possible. So when it comes to a mortgage application and you're trying to prove your income, it can be very difficult. And consequently, it can be hard to be qualified for what you can really afford and what is really indicative of your cash flow because of what your tax returns look like. That being said, we also have the situation where we have businesses that have changed gross revenue, and really, it's for a self-employed borrower to borrow more than he can afford could be quite a problem. One of the biggest default groups of people when it comes to foreclosure is self-employed borrowers. So I'm going to go through a few ways that we do self-employed borrowers and how, if you're self-employed, to make sure you have the best chance of succeeding. The first way to do self-employed borrowers is fully qualified. That means we take your tax return and we're going to do a couple things with it. We're going to gross it up by 15% to account for whatever your accountant is left off or taken out. So we're going to gross up by 15% and take a 2-year average on that. Now the other way we could do is we can do add backs. That means we're going to go through your files. We're going to think of things like your car or personal use of your house, and we're going to add those back to your income. Expenses that typically are being deducted, but if you were a regular salaried employee, you wouldn't deduct them from your income. So we do that as well. That's going to give you the most favorable interest rate as a self-employed borrower. A very important thing when it comes to self-employed people is that you have to make sure you maintain a good credit score, because then a lender is going to understand that even though you might have your regular income, you know how to manage your money around that. So we do that, and that's the way we get self-employed borrowers qualified. The other way we do it is stated income. Stated income basically means that we are going to make sure you don't owe any income tax at all, which is very important. Or we're just going to guess what your income is based on the reasonable income you could make in your field that you're self-employed in. Now, in this situation, there is quite a spectrum of what reasonable means. So you need to make sure you have a very high credit score for this. And remember, there's quite a few different programs that are involved. And but normally we are looking to see you have a good credit score, and we're trying to show income that's reasonable. Now you're going to pay sometimes a bit higher interest rate for that program, but sometimes it just really makes sense. You cannot do a stated income program with less than 10% for down payment, and that down payment must come from your own resources. So it's very important that you make sure you've saved up that money, as that's going to be an important thing for a lender to know. Typically, there's also some more flexible programs. If we go down as much as 35% down, we have some more equity lending programs. And there's quite a variety of programs out there that could be based on, we can do some more creative things when you're not showing any income based on what your net worth is, what your assets are, and base your income based on what your net worth is. An example being, there's a program out there when we do 75% loan to value, 25% down, and we just make sure your net worth equals the total of the amount of mortgage payments you're going to need to have. So if you have real estate or RSPs or any kind of investments like that, we can really make that work very well. The other thing that we can do with self-employed people is that a lot of times, you're going to have some debt that's personally guaranteed that's completely paid by the company. The more we can divulge into your financials and the more that's clear that that's actually being paid by your company, we can remove those from the equation. Car loans, credit cards, credit lines. If you're using a certified accountant, we can sometimes accept a letter from that accountant, or we're just going to go in there and see, hey, this is indeed being paid from the company, and we can eliminate it from your debt equation. So lots of options for self-employed borrowers. Just make sure you talk to a mortgage broker, as that's going to provide you the most effective kind of service, as well as the cheapest rates and terms that you're going to require as a self-employed individual. Any questions? My information is on the site. My number is 1250-814-1627. My email address is jolson@lendingmax.ca. Talk to you later.